in the Forex market.
Okay.
Same thing. And in crypto, obviously, you have your BTC, you have your ETH, Solana, and never-ending amounts of crypto.
Okay.
If I were to rank these in order, for me, Forex would be number 1, crypto would be number 2, futures would be number 3, and then the stock market would be number 4.
So you do more of Forex.
Foreign exchange market, yeah.
And most people would agree with that.
I could argue that most people could agree with that, yeah. There's a lot more volatility, there's a lot more options, there's a lot more patterns as well. Mm-hmm. And to me, there's a lot more reliability simply because, it just simply makes more sense. And from my humble experience. But lately, I've been trading a little bit of futures, and I don't really like trading crypto. But yeah, this is just, want to give you like an over idea of all the different type of markets that there is. Now we'll get into a bit more of the technicals now.
Okay.
Do you have any questions on this so far? Any concerns?
We're ready to hit big, man. So basically, you're just betting on what's going to be up. It's pretty much just like sports betting, right? But the game doesn't end.
The game doesn't end, and there's real patterns. Well, I mean, I guess you can say there's also patterns with sports betting, in a way. Yeah. Like, let's say you see the team line up
momentum or something.
Yeah, or like they do their lineup in a specific way. You see the market do a lineup in a specific way. You can predict that they're going to do a run or they're going to do a pass.
And you get paid off of them doing good or bad, or you lose money off of them doing bad.
The sports team or the trading market?
Trading.
Yeah, correct. Yeah, I mean, you're basically betting.
So where does the money come from? Like if I'm betting that you're doing better than someone else, who's paying me?
Yeah, so the money's coming from the market. So someone else is losing that money indirectly.
Really?
Yeah. So like someone else is getting.
So if you're paying that they're doing good, I'm paying that they're doing bad.
Correct. Yeah, there's always.
If I win, your money goes to me. Kind of.
It's in the air, yes, but technically yes.
Wow.
Yeah, like there's always going to be someone on the other side.
So it has nothing to do with the two parties. The money is not coming from them.
No.
The money is coming from the people who are trading.
Correct.
So you're just trading against other people who are trading.
Correct. Yeah,
that's crazy.
Okay, but this is something that I wanted to add.
How is that legal?
Yeah, because
that's just like gambling, right?
No. So the Forex market is a $6.7 trillion market. Not billion. Billion is down here.
6.7
million.
Why? Who made this popular?
Because this is the currencies of the world. Like this is the economy of the globe. You know, like you have the euro, the pound, the dollar, the Japanese yen, the Russian dollar, the noggin, the Swiss franc.
And people just became obsessed with what's going to be up.
You're basically betting on the dollars of these countries. So this is the biggest market because it's literally the dollar of a country. So this is much bigger than just the stock market because the stock market is just the US. This is just $1 billion market. This is a couple $1 billion market. No comparison to $1 trillion market. So there's a lot more opportunity and volatility.
This is the entire world.
This is the entire world. This is just the US. The US is very small compared to the world's economy.
Do you think Forex trading changes anything to do with like how the world operates?
This is how the world operates because of the foreign exchange. If not, it would never operate. Yeah. Like the whole world moves because of the currency exchange. Correct. Like money being transferred from one country to another. The stock market is just within the US. Right?
So you think the world needs Forex?
Oh yeah, without Forex, the world would not work.
Really?
Yeah, you need to exchange currencies all the time. When people travel, you go to the airport, you see that currency exchange at those spots. Yeah, when you go there, you're exchanging currencies all day. That's what makes the world go round.
So does this field make the most millionaires?
I think so.
Really?
Yeah, 100%.
But isn't there a fact? There should be a fact.
I mean, we can search it out. Let me see. Does the Forex market make the most millionaires? Yes, the Forex market can make you a millionaire. Many successful traders have achieved significant wealth through this expertise and strategies in currency market. For instance, Ray Dalio is recognized as the richest Forex trader with a net worth of $14 billion, and George Soros with a net worth of $8 billion. These are the richest traders in the world. You know what's funny? I knew they were the richest traders in the world, but I didn't know it was because of the Forex market.
Oh, really?
Yeah, I just found this out right now.
Dang.
Yeah, shout out to you.
Come on. Google, shout out to Google.
All right, so when it comes to trading any type of market, futures market, stock market, crypto, for anything, you're going to need three main things to determine if entering the trade makes sense.
Yeah.
Doesn't matter what you're trading, doesn't matter if you're driving, if you're sleeping, It doesn't matter. You just need these 3 foundations to take a trade.
Okay.
The simplest analogy that I can make this to is if you're going to go surf, right? When you go surf, you need 3 things. You need an ocean, you need a surfboard, and then most importantly, you need the right wave to go surf.
Yeah.
Those are the 3 things that you need to surf.
Okay.
When you go enter a trade, you need 3 things. You need the trend, you need an area of interest, and you're going to need your entry signal. So trading is very similar to surfing, if not exactly the same. But you're not getting risk of getting eaten by a shark, right? So trading is like surfing. 1 is going to be trend, which is going to be the ocean, current. 2 is going to be area of interest, which is going to be the beach. And then 3 is going to be entry signal, which is going to be the actual wave to enter or to surf, right?
Yeah.
This first one is the trend, which is how is the market moving?
Yeah.
Is the market moving up or is the market moving down? Based off of the trend, you're able to understand if you want to buy or sell.
Okay.
A lot of people, when they just look at the market, they just say it's going to go up or it's going to go down, but they can't really tell you why. So there's a way of identifying the trend, and that's going to be based off of market structure. The market structure is literally the heart of the market. Without the market structure, the trend, currency, like nothing exists.
Yeah.
So this right here, where you're seeing these triangles up or down, these arrows up or down, that is market structure. Picture that as if it were to be the trail of when somebody is walking in the snow. You know, when somebody walks in the snow, they leave these little footsteps.
Yeah.
This is the footsteps of the market when it's going up or when it's going down. But instead of it being called footsteps, it's called market structure.
Okay.
So picture the trend, the market structure, as the waves currents either going east or going west, for example, right? So those are terrible forms of waves, but so you have a visual. When you're going to go surf, you're either surfing to this side of the coast or you're surfing to this side.
Yeah.
But you have to follow wherever the ocean's going or the current's going, right?
Yeah.
Area of interest is going to be literally what it's called, area of interest, which is a zone where it's going to make the most sense to enter the trade. Because just because you see a market going up or a market going down doesn't mean you just jump into the market. You need to wait for it to get to a specific zone.
Yeah.
Right? So that specific zone is where you're going to enter the trade. So let's say the market is trending upwards, and yes, even though the market might be at a high point, you need to wait for it to come back to this area of interest for then here to you take the trade.
Right.
So this area of interest is the most common mistake traders make when it comes to patience. They don't wait for the market to get back to this area. When it comes to the ocean, it's the beach. Because a lot of traders, a lot of surfers, when they go to the beach, they think that just where you park your car is where you can surf the wave. No, you have to walk down a beach a little bit, maybe walk a little bit more west, a little bit more east, or even surf a little bit out so you catch the right area where the waves are being formed.
Okay.
You can't just surf off of the beach. You can't just surf wherever you want. It's wherever the waves are being formed. So you need to make sure that you're at the right
spots.
Correct, at the right area on the beach. So this is probably the sand, where this is my version of a palm tree. So if these are the waves, you need to make sure if you're right here, you need to make sure that you go to where the waves are.
Yeah.
You can't just surf from wherever you want. And then lastly, most importantly, is the entry signal. It's the reason why you enter. Entry signals can consist of many different types of things. They can consist of doji rejections and engulfing rejection. So this is a candle going up or down. This will make sense once I actually show you the technicals of it. But this is the reason why you enter the trade. Same exact thing when it comes to the surfing. You know, you can be on the surfboard, but you need to make sure that you actually see the wave incoming from far and that it makes sense for you to paddle to this wave and kick yourself onto the wave.
Yeah.
So That wave being formed or a crevice being formed from far is what's going to tell you to get onto that wave or that it's ready to go. The market gives you a crevice from far, letting you know that it's ready to enter the trade as well.
Okay.
All right. So do you understand all this so far?
Yeah, for the most part.
Okay. Any questions on this right now?
Not right now.
Not right now? Okay, perfect. So keep in mind trend, area of interest, and entry signal. And we're going to dissect every single one of these details where it's going to be easier than ever. Just kind of went over the top right now to give you a visual. But this is everything you need to learn to be able to properly enter a trade and understand if it makes sense to take the trade or not. So back to the trading, right? So we got here trading. So the first thing is going to be the trend, right?
Yeah.
So we understand that the trend is also equal to market structure, which is also equal to the heart. This is the pulse of the market.
Yeah.
The market will create a pulse to the upside, the market will create a pulse to the downside.
Yeah.
Now, in an actual heartbeat, it's called a pulse, right?
Yeah.
If you look at spell pulse wrong, pulse. If you look at a pulse of a heart, you see like the tick, tick, that's the pulse of your heart, right? It'll be something like this, it'll be like this, you have a spike, that's the pulse of the heart.
Yeah.
The market structure reflects a pulse in the same way, but it's not called a pulse. It's called HH, HL, LH, LL. Probably wondering what the hell is that?
Yeah.
Very easy, right? This is not complicated, it's very simple. HH is equal to higher, high. HL is equal to a higher low. LH is equal to a lower high. And then LL is equal to a lower low, right?
Yeah.
Higher high, higher low, lower low, and lower high. Now, these at no point do they ever go together.
Yeah.
Not all of them. This is the brother, this is the sister. These always go together, these always go together. These go together when the market is bullish. Bullish equals buys.
Yeah.
This is when the market is bearish. When the market is bearish, it equals sells. You can only have, so these actually get split right down the middle.
Yeah.
So a bullish market consists of higher highs and higher lows. A bearish market consists of lower highs and lower lows.
Okay.
You can never have these combined, right? It's just this is this, a boy is a boy, a girl is a girl. Simple. So a bullish market, which would be this right here, when the market is going up, is consisted of, what is this?
Higher.
Higher high and higher low.
Higher low.
So when something is a higher high, is that it's the highest high. So this right here would be a higher high.
Yeah.
Because that's the highest point. So what is a higher low? Well, it's the last highest low. Now, if I were just to follow back on this market right here,
Higher high is what you get paid off of.
higher high is just
Well,
where
if you're betting that they're going up.
correct, yes. But like right now what we want to do is just understand what's the pulse of the market. What's
Okay.
the market structure? Is the market up or is the market down?
Yeah.
And you cannot identify, all right, I'm going to write this here. You cannot identify if the market is up or down without market structure.
That's market structure.
Correct.
So basically, the higher high is just showing that it's already high, but it went even higher than its high.
Yes, yes.
Okay.
And it tells you where it is. It tells you it's at the highest point, it's at the lowest point, it's in the middle. This tells you where the market is, right?
That's the graph that you see.
Correct.
So if I see the graph like that and then it goes up, this is a higher low.
That would be a
It's low.
higher. That would be a higher high. Because
So if it's like this and then it goes down, but it's like that, but it was up here,
Yeah.
and it's a higher low.
it depends on how it breaks it, and it's all going to make sense right now.
Okay.
Right? Okay. That's a great question, by the way. It's good that you're asking that right now, right? So the higher high, it's obviously the highest point. Now, the higher low is the next spot, which would be this point right here. That right there would be a higher low. All you have to do is follow backwards the last from the higher high. You simply follow it back, and it's going to tell you where the higher low is.
Okay.
So for right now, we're going to make this the higher low. So we're going to do it right here, right? In a much bigger scale, just so it's much cleaner. So this right here is the higher high. This right here is the higher low. Right?
Okay. So the higher high is just the highest point.
As of right now.
Yeah.
Yes. So this market is bullish because of this higher high and higher low. The moment we break below this higher low, this market is no longer bullish. So that was your question on the bearish example, and it'll make sense right now, right? So if this market, for whatever reason, does something like this, it's no longer bullish because it has broken below the higher low.
Bullish is making it that it's up.
Correct.
Bullish means it's up.
Bullish means it's up. So as long as we are in between this higher low and this higher high, we're bullish. So this market can have a retracement to here.
Oh, okay.
Yeah,
We're still up.
Yeah, right now we're still bullish because we're still in between the higher high and the higher low.
We still winning.
Yeah, if this market does this, cool. We just broke the last.
a higher high.
We have a new higher high, correct. So this is the new higher high. And then the new higher low gets moved to the next higher low.
Alex, I'm ready.
No, hold on.
I'm ready.
Hold on. Right? So this right now would turn into the new higher low, right? Mm-hmm. So that's the new higher low at this point right here. Once again, this market does something like this. It breaks above this point right here. This is the higher high. This is the higher low. And as long as we remain inside of this move right here, we will be bullish, right?
Yeah.
So as long as we are inside of this higher high and higher low, we are bullish. So if this market does something like this, you
bullish.
can, yeah, that is bullish, correct. But you cannot count. So right now, let's say we open up price and we see this, right? So let's say we see a naked price on the market right now, right? We open up TradingView, which is where we analyze the charts.
Man, I should have been doing this instead of college.
No.
I was in college 6 years ago. They didn't teach me none of this.
Wait, what did you study in college?
I studied everything. I just switched my major every semester.
Oh, no. So you
Dropping classes left and right. I should have been in school. Alex, come on, bro. I should have been right here instead of them 6 years at UCF and Alcorn State. Come on, man.
Do you even use anything that you learned?
Nothing, bro.
No.
I learned nothing.
Yeah.
I was just there just trying to make it to class on time.
Yeah.
It was none of this.
No, bro, I didn't learn this in college either. I dropped out after like 3 months. Yeah, I didn't really make it at all.
I think now people know, like, because back in my day, I'm 30. Back then, if you didn't go to college, Jared didn't go to college, bro. He's tripping. Like, he's a failure. Now it's like if you're in college at this age, 18, 19, it's like, you're getting scammed.
Yeah, because like
People know they're catching on.
Yeah. Like it's more
Even
out
like
there.
the multi-millionaires, Alex Ramosi, they're saying school, college is scam.
Well,
crazy.
yeah, because like back then when you were in college, there wasn't no social media. People weren't
There was
posting.
no social media, so we weren't woke. We just knew we had to go to school. If we didn't go to school, even if we didn't know what we were doing, we needed to be in school. It's crazy.
Well, yeah, this is gonna save some people a lot
Should
of
have
time.
been here, bro. Straight. All right, let's get it.
All right, so when you come to identify this market to understand if this is bullish or bearish, you can't look at this point right here, right? Because
Yeah.
that right there, you can't mark this off as the higher low. It's not a higher low because a higher low mandatory needs a higher high. Mandatory, right? Mandatory, the higher low needs the higher high. So if you mark this as the higher low, you can't mark the higher high behind the higher low. That makes no sense.
This is not a higher low because it's still bullish
Correct. Yeah, this right
until
here.
it goes down there.
Yeah, correct. This right here would be the higher low.
Low.
This right here would be
Higher high.
higher high. Correct. Now, if we delete all this right here, and let's say this market, once again, let's say it does this. This market is still bullish because we are inside of the higher low and we're inside of the higher high, right? The moment this market breaks below the higher low, we are no longer bullish.
Yeah.
This market has what's called shift of structure, SOS. So it's SOS, one, because it's called shift of structure, but this is really, like this is literally a red flag, right? Because you need to understand that this is now changing, which is very important because it can turn something from buying to selling within a second. So SOS is a very big deal because, red flag, sirens going everywhere. You no longer are looking for buys. Now you're looking for
Wait,
sells.
run that back. SOS is what now?
SOS is shift of structure. So shift
That's when it goes down and it's under bullish.
of structure. Yes, that's when the structure changes. So This right here is
So
the
this
market
is structure.
Yeah, this right here is the pulse.
This is
a
SOS.
Yeah, SOS because it's a shift of structure. The market just changed from bullish to bearish.
Okay, even if it's down and goes up, it's still SOS.
Correct, and I'm gonna explain that now. Right now, why? Right. So shift of structure is very important because the market, it's literally giving you the SOS that this market is no longer doing what it was supposed to. So right now we know that's bullish. This is the higher low, which is very important. Once this market breaks that higher low, we're now bearish because this market has now just created a lower low, which is over here. When the market is bearish, it creates a lower low and a lower high.
Bullish is still.
No, bullish would be.
It's not breaking. It's still up.
Yeah, bullish would be if it breaks back above this right here. And I'll explain it right now, right? So this is where things get a little tricky, but as soon as you understand this, literally you understand everything if you get this, because this is the pulse of the market. I'd say 80% focus of learning how to trade on this, you could get everything else.
On the trend,
right? So
right now the trend is pretty much what everybody sees those.
Correct.
Okay.
Yeah.
If you know what that means, then you good to trade.
You got everything, yeah. So that's the higher low, that's the higher high. We got that.
Yeah.
Whenever we break below the higher low,
Bearish.
we're bearish. And now when this market goes bearish, right? So we'll just mark it off like this. This now becomes the lower low, and this now becomes the lower high.
Okay.
So lower high.
But if we break below the higher low,
the lower high. Yeah. If we break above the lower high, we're back to bullish.
okay, yeah,
Correct.
yeah.
Right? So let's run this back right here, right? So this market is now bearish.
This is that higher high though.
Was the higher high. When the market shifted this structure point right here,
Now it's the lower
bearish.
high.
Yeah, now the market's bearish, and when the market is bearish, it
turns to the lower high.
turns into the lower high. Correct.
Okay.
So as long as we are in
But
between,
if it was bullish, if it would have stopped right here, this still would have been a higher high.
correct.
Okay.
Yes. So yes, correct. Yes, you got it. You're actually getting it pretty easy. I did not expect that. I'm not gonna lie. I'm not gonna lie. Right. So this market right here is now bearish. This is the lower low. This is the lower high. We could do in here all this fidazzle, whatever you want. We're still bearish because we have a lower low, lower high. Okay. Let's say the market right here breaks below. We are are bearish. So this now becomes, all right, I'm gonna do this like this. This market does this like this.
Market messed up bad.
Yeah, but you can make money off the sells too.
Yeah.
So right now,
You just got to guess right.
you make a very highly educated guess.
Yes, yeah.
So this right here would become our lower low, and then our lower high would just follow price back. Whenever we see that pulse, that market structure, that now becomes our lower high. So this market is bearish as long as we remain inside of here. Same exact thing. We break below again,
Bearish.
new lower low, and then new lower high. So this goes to both of these right here. Whenever you break as a new lower low, you always need a new lower high.
Okay.
Whenever you break for a new higher high, you always need a new higher low.
Okay.
Right? So, for example, let's say over here, got a lot of lines going on, right? Just to be all these nonsense ones. So it's like very clean when it comes to the market. Like the less information, like the less stuff you have in your charts, the better. So right now, this is the lower low, this is the lower high. If this market does this, what happens?
We're SOS.
Yes. Yo, I did not think you were gonna say it. I'm not even kidding.
Come on.
Bro, yes, we are.
ready.
Yo, for real, I did not expect that. I'm not even capping right now. Yes, we are SOS.
Yeah.
Big problem. We have a shift of structure. What happens when you have a shift of structure? Because we were bearish. So when it shifts of structure, what happens?
Oh, we're bullish.
Yes.
We're bullish.
Yo, this is crazy. Yo, I'm not even like capping.
We're locked in, though.
Brother, I'm not even kidding, dude. You'd be surprised how many people would get that wrong.
Guys, we about to change the profession.
Yo, damn, bro, I'm not even like hyping you up right now.
No, I didn't think I was gonna get it at first. I'm like, dang, I don't know all these charts and stuff like that.
No.
I'm sure there's a lot more stuff I need to learn to be able to trade. Though.
Yeah, no, but dude, you
But
get,
I'm just getting the concept.
brother, you're getting it faster than I got it, bro. Like
Really?
it took for me to understand what you're understanding right now.
But you didn't have you as a coach.
No, I just had, bro, a bunch of random YouTube videos, bro.
Yeah. Sometimes it's better to learn the hard way
Correct, yeah.
because you feel the pain and now you can like feel how good it is to be up.
No, I agree. Now that we have this SOS, we're back to bullish. So this is now the higher high. This is now the higher low, right?
Yeah.
Easy, higher low, easy, higher high. Once again, this market can simply just have this retracement here. We're still bullish.
Yeah.
Right? We can do something like this. We're still bullish. We can do something like this. We're still bullish because we are yet to break above or below the higher low and the higher high.
Okay. So if we go down, we're bearish, but if we go up, we're still bullish, but it's SOS.
No, it's SOS is when it goes from a boy to a girl or a girl to a boy.
Okay. Okay. So we're still just bullish. It's just a higher high.
Correct.
Okay.
Bro.
You teaching me good, bro.
Bro, hold on. All right, so yes. So if this decides to do this, it's not a shift to structure. It's a continuation of this.
Yeah.
So this turns into the new higher high. This right here turns into the new higher low.
Okay.
Easy.
100%.
That right there is trend. That is how you identify if something's bullish or bearish.
Bet.
All right, so we're gonna put it to the test real quick. All right, I'm gonna pop up a clean chart, and I want you to identify for me if this market is bullish or if this market is bearish. Right?
Yeah. You can get some horizontal too. Do both.
All right. All right. Is this market bullish or is this market bearish?
Oh, this where it gets real. All right. Is it bullish or bearish?
Remember what we spoke about. I remember. I should have explained something before, but it's okay. I'll wait. It's good if you make a mistake.
I'll say bullish. I mean, not bearish.
Okay, why? Where's the lower high? Where's the lower?
It's the high and it broke down.
Okay, show me. Go ahead. Mark it off.
So it's the higher high right here.
Remember, bearish or bullish? You said bearish.
Bearish.
Okay. Okay. Remember, bearish, lower high, lower low. So it can be a higher high. If it's bearish, it's a lower high.
Oh, higher high.
So what would you say? It's bullish or if it's bearish?
Bullish.
Okay, go ahead. Draw the horizontal line. It's the most important thing.
Horizontal line.
Remember, look, this is a perfect bullish example. Draw the higher high with a line across. Are you rethinking?
So more so right here.
Yes.
Right.
Yes.
Okay.
Okay, so it's not bearish.
Yeah. So it's bullish.
This market would be bullish.
Okay.
Correct.
Only thing that was throwing me was because it broke this line right here, right there. So I was thinking it was bearish.
It was bearish, but
then it came back up
and it went back to
over.
Yeah, so like it would have a line like this, I'm sure. So that would be the lower high. It broke above. So yes,
this was the higher high at one point. And then when it broke up under this, it became bearish.
Yes,
right?
and then that became the lower high.
That became the lower high.
And then
and then it broke against the lower high. So now it's bullish again.
Now it's bullish again. Yes. So this market was bullish for this move right here. It was bearish for this move right here. And then it went back to bullish for that move
right there.
Yes.
Now let's say it stopped right here. It's still not bullish.
No,
that's not higher than that, right?
It is higher. Oh no, and it stopped. Yes.
It would still be bearish.
Yes.
Okay. Or there.
Yo, I don't think you understand, bro.
We're there, bro.
Yo, I don't think you understand, dude. I'm genuine.
I thought I was lost, and I was like, okay, now I got this.
Yeah.
So we gotta do that one more time.
I mean, brother, you literally asked all the right questions. Like you said everything correct. So yes, if this is bullish, right there, it shifts to bearish. So this could do this. As long as it doesn't break above that,
still bearish.
Still bearish. And for the example, I said it did break it.
Now we're bullish.
So now it's back to bullish.
Yeah.
Brother.
Oh, we're locked in.
No. You fucked it up. Like, I'm not even kidding. All right. So to your first original question, and like, I really want to double down on trend because again, everything that we do from this point forward is being dictated because of the trend. So for example, like,
bro, this puts it in perspective though. Cause it's like, I've never traded ever. So if this is my first time watching this video just because, I want to watch Ashton Hall, whatever. If he can learn it, why the freak not me?
Correct. Yeah. Correct.
Yeah, that's crazy.
Yeah,
I like this. Model.
Yeah.
It's cool.
Because like, I need you to understand the power of like this right here, the trend. Like, this is what 99% of surfers, when they go to the beach to go surf, they need to determine where are the waves going. Are the waves going this way or are the waves going this way?
Yeah.
If you
to catch the wave the right way,
correct.
You need to know the motion.
Yeah. If you know the waves are going that way, brother, you just go that way. You find the perfect way to get, and that's it. You know.
Yeah.
That is where the main focus should be on. The main focus should be to understand where the trend is going.
So how do you guess the market?
Well, this is the first thing, is understanding where the movement is going, and then you just have to find that sweet spot to enter, which is going to be the next spot, which is the area of interest.
Okay.
Yeah, so I just want to quiz you one more on the first example that you originally set, which was if the market is going down and it does this, is this market bullish or is it bearish?
Bearish.
Wrong.
Really?
Wrong. And I'm glad you're wrong.
But it didn't go over this though.
No, but remember.
If it's going down.
Yeah, okay, but this was the lower high, this was the lower low.
Yeah.
It broke below that one. This becomes the new lower low, the new lower high. Price broke below this one, the new lower low, new lower high.
Is that because it's consistently going down?
Yeah,
at the
so
same rate.
Yeah, so new lower highs and lower lows are being made.
So this is a new lower high.
Correct.
And it broke that, so that's why it's bullish.
Correct.
That makes sense.
Bro, you see? Wow, that was like literally what I just did right there. This example right here of this doing this is no different of this example of me doing this. That you claimed it to be bearish because that was the higher low, that was the higher high. It broke below. This is the same thing. This was the lower high, this is the lower low.
And it finally cracked that.
It literally, if we just flip this whiteboard around, it would show the same thing.
That makes sense.
Right?
Yeah.
Okay, perfect.
Wish you.
That was, honestly, I'm more excited about this than, I don't even.
I haven't seen any other like videos, or I haven't even looked into trading ever. I always said I'm not gonna like dabble into that. Always. So I don't know how good I'm doing, but
You're doing it. So does this make you feel better just to understand the direction of the market?
100%.
Okay, perfect. So when it comes to the trend, you're going to see, and this is just like to wrap up the trend part, you're going to see, you're not going to see price clean like this. You're going to see a lot of price. You're going to see this.
Yeah.
You're going to see so much price action that you're going to get confused.
It makes it harder to read.
Correct. Like even myself, I would see this and I would be overwhelmed, right?
Yeah.
Because there's just so much going on. And this is where traders get confused. They're like, okay, yeah, over here it was here, and then here it was here, and here was here. And yes, all those points are relevant. They're all obviously valid. But price right now is over here.
Over here.
Like,
So none of that really matters.
to a certain
I mean, to read it.